Actually, I mean, my coverage is actually traditionally has been semiconductor capital equipment, and I'm also going to be covering the IT hardware sector. And within that, Apple obviously is the most attractive name, and it's actually a pretty good time to initiate given where the stock is and what it's gone through over the last 6 months.
Sure. So you're going to approach this analyzing Apple as a device company. I see here a big part of your argument is about services, and obviously it's quite controversial on the street about whether you can really value this company on that or not, given the kind of disclosures that you have today and the way that they're looking to grow the business.
That's right.
What makes you confident about the $220 price target?
Sure, absolutely. So, one of the work we have done, which is, I think, quite differentiated, is really focus on the services side of the business, right? This was about mid-30, $35, $37 billion revenue run rate business last year, touching upon $50 billion next year. And it's grown pretty impressively, over 20% CAGR in the last few years. And what we do think is over time, services is going to be a bigger piece of the story. iPhone has had peaked a while ago, but it is an important driver for the stock. But at the same time, when you start looking ahead, we do believe services is going to play a bigger role, both in terms of revenues, margins, and also more importantly on the earnings, which we do think eventually will translate into a better multiple for the stock, given services with a recurring revenue style business always warrants a higher multiple.
What I thought was interesting about how you got to 220, Krish, was that you applied a 12 times multiple for full year 2020 or fiscal 2020 to Apple's earnings for the hardware core business right now, and a 25 times multiple on the software services recurring revenue part of the business. How much does that part of the business, or the software part of the business, ratchet higher as the year goes on, as the years go on?
Sure, absolutely. So, the way we looked at it is like, we do think that by 2021, the service is going to be almost a $60 billion revenue business. And we do have some margin expansion because we do think that Apple is going to be innovative on the services side, providing more services and probably creating more value with their existing install base. The second thing is, to your point, Melissa, I would say that services with the recurring revenue style always is considered a higher quality business. And when we try to do the math, last year we believe of the EPS, $3 was attributed to services. And we come up with a math that is going to be doubling to $6 2 years down the road.